A lot of our traders, in the beginning of your careers, it's all about how you survive those first 12 to 24 months because you need the iterations, the feedback loops from the market. And during that survival part, as you start understanding the markets more, the luck starts, you're able to take advantage of luck. Most people drop out because of the expectations of what it means to be a trader, what's sold on TV and so forth. But the luck, for example, that night, our traders would not have been able to take advantage of that trade if they had never traded probably another 300 opens before. And so it was synchronous that it happened, that a Brexit event happened after, the traders lost their entire accounts, able to start over. And therefore we were presented with this so-called, extreme volatility. And those who don't understand, for day traders, futures day traders, we pray for high volatility, for high vol conditions. We have strategy types of how we deploy them. But that luck is a manifestation of being in the game. And so, but along that journey, you feel like there's so many unlucky moments. To find that luck is a process of sifting and mining through the little monkey, mind in your head of all the unlucky moments you've had.
Definitely. But yeah, there you go. So a little bit on luck. What we're going to talk about now is a little bit on collaboration, because this is what we really sort of grew as a team. And from the origins of Axia, we started to get people trading a much more diverse set of markets. And this, comes from that looking to people around you and finding out what they're trading and why they're doing it and how they're doing it. And what I've got here is distribution of trade by symbol. So what this is essentially what was our most traded symbol or most traded markets. I'll give you guys a few seconds to have a little bit of guess. Perhaps the top two. Could you name what the top two are? So one was 25% of all trade, one was 16%. This is all of the traders in our London office. What were the
Love
most
to
traded
see.
markets for 2021?
Yeah, just love to see those answers. What you think, were the most traded markets in 21 for the group, right?
2021, the
Okay.
entirety of 2021 for all
Yeah.
of our London traders.
Please let us
Got-
know what you think.
I'm glad for the specifics. Thanks, Alessandros. So, as I was going to say, bonds and commodities, asset class specifics,
Yeah.
two markets. So Bund and
Actually,
Tino,
products. Yes.
yes, Bund and Tino, Bund and S&P, Bund and S&P, Tino, Bund and Oil, S&P and Bund, 30 years. Okay, so interesting that some have got one of them and no one has got one of them so far. So big reveal. Top two, S&P and gold, which nobody got at all. I'll give you Bund, which I think, if you've seen a fair few of our YouTube channels, you'll grasp that is a pretty well traded market that a lot of our traders do trade. But S&P and gold. Now, this is an illustration of that collaborative idea, because 2016, when Axia first started up, almost nobody traded gold and not many people traded oil. I remember sort of kind of stopping trading oil around about 2013 because, again, the volatility died off. So by 2016, no one's trading it. So you have to ask yourself, well, what changed? And what changed is that one person goes and finds an idea. And this is the value of that collaboration. One person finds an idea, and that's your kind of trailblazer, someone who branches out from perhaps the S&P, the Bund, which a lot of people are trading. That develops now an increased awareness, because once you have increased awareness that one person's doing all right in gold, everyone now starts to look at gold that little bit more, because clearly there's an opportunity there. It's not about stealing opportunity from each other. And we talked about this with that whole fear of other traders around you. You can never steal someone else's strategy. But if you recognize that there clearly is an opportunity here, that increased awareness now allows you to bring in your own skill sets. And your own skill sets see a way that you can go about trading it. And now you start to get a variation in skill set. Because that original trader who had perhaps one specific trade, now followed by two or three other traders who are now thinking, right, how do I apply my approach? How do I perhaps apply profile to trading gold? Are there any sort of short-term order flow patterns? Can you start trading gold on news? And all of this develops new ideas. And this then grows as a group. And that group growth then brings more and more people to trade in gold. There's more opportunities. And a lot of it is about the awareness of opportunities that you get in those types of markets. Because gold has not featured so heavily this year. And that again comes from that understanding as a group that the opportunities are changing, that gold is no longer perhaps the market where the greatest opportunities are, and perhaps the wider opportunities that there were in gold have now become less. And that's the importance and the value of that collaborative effort. That no, it's not the whole group trading the same trade over and over. It's the fact that one person generates a new idea, and that new idea generates two more new ideas, which brings in more traders. And so all of a sudden, you get this sort of almost exponential growth of traders' understanding. And you do end up with this. And it's what we call sort of leveraging group learning, that you can start off with one person who's got a technical breakout trade, and that may well be it. But as soon as people start to realize, well, if that person's trading technical breakouts in gold, perhaps there's other opportunities. Surely that's not the only technical trade you can play. And this is, again, like I said, where people start to bring in new variations. They start looking at the much wider structured trades. We start seeing those traders amongst us that are much more sort of inclined towards the big move on the day rather than the short term snap in out trades. They start coming in and seeing the opportunities. You start then getting more of a narrative and seeing how gold relates to the wider narrative, how it correlates to the S&P, the Tino, the dollar, any of those markets. And this then brings in the more macro traders among us. And it doesn't necessarily always happen in this order. It could happen in the other way around, that it's the macro traders spot something and this brings in more of the technical traders. But as soon as one person sees something, this as a group sort of spirals into a greater understanding, a greater knowledge of what's going on. And you then start seeing, in this example, more and more news trading. And that's where you can sort of leverage this group learning. That's the kind of way that was happening throughout 2013, 14. That was what brought in that early growth phase and that what we call a professionalization.